At a time when our world faces an unprecedented energy crisis, the need for transformative solutions has never been more urgent. But within crisis lies opportunity. Tribeca Future-Facing Commodities Conference, held in the heart of Singapore. Over the next, not just we're diving deep into solutions, beginning with the technologies and resources that will pave. This is where the leaders of today shape the energy landscape of tomorrow. Innovate and inspire. Together, we will discover unparalleled investment opportunities of the energy transition and connect with like-minded professionals to making a difference. The future is not what happens next. It's what we create. Welcome to the annual Tribeca Future-Facing Commodities Conference. Hard to believe that half days ago. We are almost at the end of our conference, and I think we can actually say we've saved some of the best for last. Some great educational opportunities, a wonderful panel, and some stellar companies for you to learn a little bit about as well. First up though, we're going educational, and this fellow here, for a second time only here in Singapore, is Dave Franklyn. Dave is the Executive Director for Argonaut Funds Manager. So we are looking in this segment here on the top 4 stock picks for the energy transition, but also looking a little bit in detail at how you choose stocks in the resources sector. What are you looking for to see if you can actually get one that's going to hit and make that little bit of, am I allowed to say money for us, Dave? Is that all right? Can it be so
That's the plan, yeah.
Would you please make Dave very welcome, everyone?
Thanks, Chrissy, and thanks everyone for making the time this afternoon. Yeah, I think today, and my talk's really a bit of a change of pace. You've seen a lot of companies present, and what I'm going to talk about today is just how we go about assessing and analysing and coming up to a view on how we want to structure a portfolio. So I'll run through it and give you a bit of detail. So basically, I'm the manager of the Argonaut Natural Resources Fund. We've been going since January 2020. Since that time, the fund is up 188%. As you can see, 22 and 23 were good years. 24, the way I described it is you go through periods where you're making money and you go through periods where you're trying not to lose money, and financial year 24 has been a bit like that. We're about flat for the year, which I think is pretty good relative to our peers. But we're high conviction. So typically we have between 10 and 25 stocks in the portfolio, and we're looking for companies that will outperform. We've got a 4-stage process. So step 1 is, what are the key resilient themes going to impact on the resource market? We're focused on resources. And we see there's 2 key themes. The first one is energy transition, essentially future-facing metals and markets, and then increased geopolitical risk, which I think we're all seeing the ramifications of that globally at the moment. From there, we then say, well, if they're the key themes, what commodities are best placed to capitalise on those key themes? And then from there, what are the companies that are producing or looking to produce those commodities? And we're looking for value and we're looking for quality. And I think really what we've seen in the last 6 months, if you've diverted away from quality and value, that's where you've got particularly hurt. And then on top of that, it's all very well to find these opportunities, but you need to build a portfolio and you need to manage risk. And that's something we really pride ourselves on. I think in something like 80% of the months since inception, when the market's fallen, we've outperformed the index. So I'll touch on energy transition first. Again, if you look back to the last 3 or 4 years, energy transitions, the thematic has been a whole new wave of demand coming in for a relatively small group of commodities, copper, nickel, lithium, rare earths, forcing up the price, driving new supply into the market, but creating some really good, some returns and equities that have performed very well. I think in the last 6 to 9 months, that story has changed. And I think what we're seeing is China really exerted its power over the industry. If you look at a lithium-ion battery, there's three key components. There's lithium, there's nickel, and there's graphite. So let's look at those. If you look at lithium, the price has fallen by something like 80% over the last 12 months. And that's been driven by production really coming out of nowhere. It wasn't really predicted by most of the market commentators, but what you saw is China increase its production of lepidolite production and also production coming out of Africa, which was largely funded by China. In the nickel market, it's been more of a longer-term program where Indonesia had the raw material, China had the expertise. By partnering together, they've dramatically increased the nickel supply of the tier one nickel for battery feedstock. So again, the nickel price is down 50% or so over the last 12 months. And then graphite, I think the surprise there is everyone knew that synthetic graphite is a reasonable portion of the market, but production really ramped up, and that put pressure on the emerging projects, and graphite prices are also down sort of 40 or 50%. So the implications are it's been a difficult 6 to 12 months for energy transition, all those future-facing metals. What that's meant for lithium-ion battery prices, though, is they've fallen, and China, being a real driver of that industry, have been able to produce cheaper vehicles and continue to grow their EV market. The second thematic is geopolitical risk, and that ties into the future-facing metals as well, because a lot of the locations where those future-facing metals are in locations where there is some risk. A good example of that is copper, where roughly 40% or more of global copper supply comes from South America, and South America has typically had supply disruptions over time. There was a major disruption this year in Panama, where a major copper mine was put on care and maintenance. So I think that's an ongoing thematic. I think the other thing is just a supply chain reconfiguration. So notwithstanding these commodities are spread around the world, I think what you're seeing is companies or countries are deciding who they want to trade with, who they want to buy from, who they want to sell to. And so you're seeing almost a duplication of supply chains so that there's security of supply. I think that's an ongoing feature. For example, in Australia, you're seeing the development of some lithium processing facilities, a lot of incentives in the US and the EU to move the exposure away from China in particular. I think that's an ongoing theme. And I think the final point I'd make on this slide is just defence spending globally is going to expand pretty rapidly. And a lot of the commodities that are required in that are things like copper, nickel and steel, and that will also give a good tailwind to commodity demand going forward. This slide kind of puts all that together. So what we're looking at here is the slide on the left, the three top producers of these groups of commodities. And what you can see is copper. Copper is a very big market, about 25 million tonnes per annum, about 10 times the size of nickel. So it's actually been, it's pretty diverse as far as the producers. And while China has a strong position in processing, it's 50% or slightly under. But what you're seeing is nickel, as we talked about. It's showing Indonesia there as the dominant supplier, both on the production side and the processing side, but that's really in partnership with China. Cobalt, dominated by the Democratic Republic of Congo, which is really a difficult place to invest, and then the processing is done in China. So dynamics there aren't great. Lithium, you've seen a lot of production come out of Australia. About 50% of the global market now is coming from hard rock spodumene in Australia. But on the processing side, China's still a pretty dominant player. Graphite and rare earths, as an investor, you've got to be careful where you have Chinese domination of both the production and the processing. And we've seen that with prices over the last year, where those prices have fallen by 50% or more. So it just shows you've got to be careful in the commodities that you're targeting. So I'll just touch on a couple of commodities now and just give you some thoughts. So the first one is lithium. You can see the price has gone from a peak of $6,000. This is spodumene price, which is a hard rock lithium produced in Australia. So the price has gone from roughly $6,000 a tonne 12 months or so ago to a bottom of about $1,000 a tonne, and it's just edging its way up. And as I mentioned before, it's really driven by the fact that you just had a whole new wave of supply coming on, which wasn't really expected. It wasn't really in the forecasts of most of the analysts. So you saw a lot of production coming out of China through lepidolite production, and you saw a lot of production coming out of Africa, funded by the Chinese. So supply pushed ahead of demand, and the price fell. Lithium is still a relatively small market, so it's reasonably easy to get imbalances in demand and supply, and that's why you saw the big spike up, and that's why you saw the big collapse. The question is, how is this industry going to look going forward? So I think the Pilbara result for the half year to December, I think gives you a good snapshot of kind of how the industry might look in the medium term when it settles down. If you looked at the financial year 23 results, the EBITDA margin in that year was about 85 to 90%. So extraordinarily high, and that's when the prices were very high. In the last half yearly result, the EBITDA margins are about 55%, based on an average price of $1,645 per tonne. But that's for a 5.3% concentrate. The standard is 6%. So the equivalent of that is 1,800. So to me, the group's got a market capitalisation of about 12 billion. On those kind of half-year numbers, if you annualise them, it's difficult to come up with a value that kind of justifies that market cap. So I think the market's saying, we think that the prices are near the bottom. We think there's some upside, maybe a long-term median price is around $1,500 to $2,000 per tonne. So I think that gives you some optimism. Pilbara is also looking to increase its production. In that half year, it produced 320,000 tonnes, which is about 650,000 tonnes for a full year, and it's ramping up over the next few years to 1 million tonnes. But having said that, the spodumene price is currently around 100 to 1,200, so some positives and some negatives there. Our preferred exposure in lithium, we're looking for the more advanced tier 1 scale development assets. The one we really like is Patriot Battery Metals, has a global scale project in James Bay in Quebec. Its market cap is about 1.2 billion and a high grade deposit, about 110 million tonnes at about 1.4%, but that's likely to grow to 150 million tonnes or more. And I think in all these companies and in investing, you're always looking for high quality management. And Ken Brinston, who was the managing director of Pilbara, he retired from Pilbara about 12 months ago. He's come on board at Patriot, moving to Canada to run this business. So, we think that's pretty exciting. It's our favourite on the lithium side. If you look at uranium, is uranium the next big thing? Look, I think uranium and nuclear power is undoubtedly going to grow market share. And what we're seeing at the moment, due to a lack of investment in both raw material and also processing technology, is you're seeing demand heavily outstripping supply, and really it's been a drawdown in inventories that has kept the market operating. The price of uranium has doubled in the last 12 months. And if you look at supply and demand going forward, you'd suggest that there's further upside there. There's really one company that I think is a standout in the sector. It's an emerging, or is a developer pushing forward to production, and that's NextGen Energy, operating in the Athabasca Basin in Canada. It's received its provincial approvals already, which the approval process, as you'd imagine, uranium is difficult and time consuming. So they've got the key approval, which is provincial. The federal approval should come through this year. They've got a big resource, very high grade, a multiple of what most companies in the sector have. Its market cap is already $6 billion Canadian, so it's recognised as a major player. It's going to be producing more than 20 million, potentially 30 million pounds of uranium per year. So that's about 25% of the global market today, and I think something like 50% of Western demand. So it's going to have a major impact, and its costs are going to be very low, about $20 a pound. At $100 a pound, it'd be making earnings before interest, tax, depreciation, amortization of about $3.4 billion. So that shows you there's upside as they go through that process of building the facility and starting to produce. High quality asset again, it's one we really like, and I think really stand out in the sector. Copper, copper's a consensus buy. If you're in future-facing metals, most of them have fallen over the last year, as we've talked about. Copper has been very resilient. Demand is still very strong. The outlook is very positive. Our favourite is Metals Acquisition Corp, which owns the Cobar mine, or the CSA mine in Cobar. Very high grade, very good management team. We think it will emerge as one of the go-to copper stocks in the Australian market. And I've just thrown in a slide on gold, which is a bit unusual, but I think it comes back to that geopolitical risk factor. What we're looking for there is gold prices should continue to move higher as interest rates fall. There's three key drivers of gold. You've got China, India demand, particularly jewellery and retail demand, which has been steady. Central bank buying, particularly Russia, China, Uzbekistan, Turkey, etc., have really driven the price over the last 12 months. What's been lacking is the general investment market through exchange-traded options, exchange-traded funds kicking in. We think that we'll see improving demand from that area. So we look for long mine life, production growth, low OPEX, low CAPEX, tier one locations where possible. Our favourites are Capricorn and Genesis. And just getting towards the end, just a developer checklist. So it's one thing to look at producers that are generating cash. You can put a multiple on them. You can look at them like a normal financial asset. When they're a developer, it's a bit more difficult. So typically we have a checklist where we're looking for an established mining province, significant scale, a mainstream commodity. You want to be in a commodity that people know and understand, high grade, capable management, obviously critical, external validation. So if you've got a joint venture or a partnership with an industry major, you've got an offtake agreement and that can all help. Transparent market, so easy to understand. Low costs, net cash is always good. Key customers outside China and strong ESG credentials. I'll leave it there, but thanks, Chrissy.
I thought you were going to have another go at the next slide then. That was a very impressive whole back. As I said, let them wanting more. We're off to Western Australia's remote but highly prospective West Musgrave region now, and a company that's surrounded by the big boys. You can imagine BHP, Rio, Redstone, they're all in this area. So what are they after? They're after the same thing that GCX Metals is after, and they think they've got a little bit of an inside running there. So this is Mr. Lyon, Mr. Thomas Lyon. He's the Managing Director and CEO of GCX, and he is currently focused on the development of their flagship copper, gold, platinum group element and nickel. But wait, there's more prospect, which is called the Dante project, and it is in this really interesting little area. Please make him welcome.
Thanks very much for the introduction. So Dante is our core asset, and we're drilling at the moment out in the West Musgraves, and that's going to be the focus of my talk today. So we've just put some assays out to the lab. We're doing about 10,000 metres at Dante. It's a big project, 650 square kilometres, and we're 15 k's from BHP's Nebo Babel, which they're building at the moment. It's a $1.7 billion mine build just down the road. We've got the airstrip on our tenement. We've got some really large outcropping targets, many of which are quite high grade, and essentially there's hardly been any drilling. So it's an emerging major mining province on Earth, and not many people, it's funny, a lot of people aren't aware that BHP is building a big mine out there, but I can assure you it is going ahead. All the guys that are working on the BHP mine, there's probably 300 or 400 people there at the moment, fly into our tenement because that's where the airstrip is at the moment. So it's a good spot. We've got a market cap of about 14 million at the moment. And on the board, we have, Tribeca's our largest shareholder, so they have about 17% of the company. Directors and management have about 7% of the company, and the top 20 is relatively tight at almost 50% in the top 20. Ben Cleary and Hayden Smith are on the board there. Ian Middlemas is our chairman, who you might know. He's chairman of several ASX-listed companies and has had quite a long career and some great successes with ASX Explorers. And then there's me there as the CEO and Managing Director. So this is our technical team. So we've been really lucky to have been able to attract some excellent consultants to work on this project. And these guys pick and choose what they work on, and they're very selective. Scott is arguably, you probably won't like me saying this, I think one of the world's best geochemists. That's my opinion. And he's working on this with us, and we're really lucky to have him. And Wolfgang Mayer is one of the world's leading layered mafic, ultramafic intrusive experts, and he's out at Cardiff University, so he's consulting with us as well. Will Alston's our stakeholder and community advisor, and he works on our heritage work, and he did a lot of the clearance, early work for Fortescue Metals over the Pilbara to get their operations off the ground. And now he's come working with us. We were his first client as he went out as an independent consultant after leaving that business. So here's the Dante project. This is why I'm here, and I ran this as a private company last year and sold it into GCX and came through with the asset to run the project. And we did all the heritage clearance work before we went public, so we had about 25 drill fences cleared for heritage before we listed the asset, and we are currently drilling there at the moment. You can see, I mentioned that we've got BHP here, so the big Nebo Babel deposit is 15 kilometres to the south. That's a 400 million tonne deposit. Mine's being built now. We've got the Sakooth deposit, which is a 160 million tonne copper deposit. It's also got palladium and some nickel with it as well, and some gold. And then we've got the Manchego deposit just up here. So there's a cluster of these magmatic sulfide deposits sitting around our tenement. We're in the blue here, so we've got a 650 square kilometre, one of the real jewels of the West Musgrave region that we own 100% of. We're landlocked by BHP, so all the purple here is BHP. And we've got Rio Tinto out here, and Cobalt Mining, which is Jeff Bezos and Bill Gates' artificial intelligence-backed exploration company there as well. So all the big guys are out there. This is big company territory, and we've got big company targets. We're kind of a little island amongst BHP there. So it's a really good position for us. We've got some really big targets. There's the airstrip, so we can fly in directly to the tenement, and I do regularly. That's all the BHP guys waiting to get picked up by the bus to go down the road. Now, this is quite an advanced project, even though there's only been about 30 drill holes, which almost all hit mineralisation. It's not really been drilled that well, and most of the money, there's about $15 to $20 million worth of historical data that we have inherited off this project. So WMC had it for several years, BHP had it for a while, Anglo American had part of it, Western Areas had a joint venture there, and they all did excellent work, but not much drilling. So we've got full coverage airborne EM over the project. We've got 3,500 auger geochemical drill holes. We've just done the largest high-resolution airborne magnetic survey ever to be conducted in the region, and we've got about 30 ASEAN diamond holes there as well. Well, I can say a lot more than that now because we're in the process of drilling it. We're drilling pretty hard for the first time. So this is just some independent research that was conducted by the WA Department of Mines in collaboration with the university. And what they did is they took all the information they know about what creates these big copper, nickel deposits and big platinum, palladium and gold deposits. And they put a prospectivity ring out over the whole West Musgraves region. And the outcome of that research, when we've overlaid our tenement on it, is that we come up with the highest ranking in the whole region for nickel and copper, and the highest ranking for platinum and palladium and gold. So that's quite striking. It also plots this significant fault, the Lachlan-Mundrabilla fault, which is believed to be responsible for the production of these big magmatic sulfide deposits running straight through the middle of our tenement and literally straight through our magmatic sulfide intrusion up here called Cronus, which I'll talk about in a minute. So here's a magnetics image of the project. We've got better mag than this now because this is about 200 metre line spacing. But we've got 4 key targets, and we're really just drilling the low-hanging fruit here to start. There's going to be a long pipeline of targets that will fall out of this project over the coming years. We've got 2 target styles. One is exactly what BHP are building their mine on now, magmatic sulfide. The difference with ours is that it's primarily copper and gold dominant, we believe, and the palladium and nickel are kind of accessory to that. That's what the early indications are showing us out there. So Cronus is up here in the north. It's 7 kilometers long, so that's just to give you an idea of scale. You can see the intrusion we've interpreted there in the magnetics, and there's a really strong geochem anomaly over this whole thing. 5 holes into it historically, all hit up to 300 meters of disseminated copper sulfides, primarily chalcocite and bornite, and gold at the top and the bottom of the hole, with palladium in the bottom. So it's a pretty compelling target. In Scott's words, he would say this has a large metal budget. So we know that magmatic sulfide saturation has occurred in this intrusion. It's the largest that we know of in the West Musgraves as a magmatic sulfide intrusion for the outline we've interpreted, over 7 kilometers. It's the largest that we're aware of. So obviously it hasn't had much drilling. We're drilling it now and just aiming to learn a little bit more about it. And all of these 5 holes hit mineralization. So we're drilling here and up here over a couple of kilometers. We've also got these 3 massive outcropping high-grade platinum, palladium, gold-bearing, and possibly copper-bearing reefs. Now, these are probably one of the largest reef systems in the world that has not been drilled yet. And they stick out of the ground over 23 kilometers. Every time you pick a rock up, it's running grade. There isn't a single rock in that reef that is not mineralized. It's quite compelling, and no one's ever drilled it. So I'm not aware of a global example where we get all of these metals together that we have in these reefs. They've got platinum, palladium, gold, copper, titanium, vanadium. They're essentially pure metal. And in the bushveld, you get these 80 centimeter thick reefs sometimes, which have high-grade platinum, palladium. You also get in different zones base metals, nickel and copper, and you get vanadium, titanium bands. But what we're seeing here is what I like to call a freak of nature, where we're getting all of those in the same layer, which I'm yet to be made aware of another example of this globally. But they're huge, and these are 23 kilometers just outcropping. But if you look at the magnetics, they're magnetite-rich reefs. You can see all these other lines. Now, that's under shallow cover. If one of the hypotheses we have is that it's not just these ones that are outcropping over 23 kilometers, but if these are all mineralized reefs as well, we're looking at hundreds of kilometers of strike, and no one's ever drilled it. But we're drilling it now, and we've just sent our first lot of assays off to the lab. So we've got about 20% of the drill program. We're doing 7,000 meters that we planned. We'll probably end up doing more across the Cronus magmatic copper gold sulfide, the Creus reef, the Hyperion reef, and the Oceanus reef. So that first 20% of the assays should be back in a couple of weeks, and then the other 80% of the program will be there to come thereafter, very soon after. So this is the Cronus intrusion, and this just is a simplified version of the auger geochemistry. There's about 1,000 auger drill holes over this intrusion, and it lights up like a Christmas tree. The purple's palladium, the yellow is gold, and the green is copper, and the orange is nickel. Now we're getting just gold alone, so these are kilometers, that's 7 kilometers, right? Just gold alone, we're getting up to 0.7 grams per ton in soils. But we've got layered, it looks like multiple pulses of magma, which have had different metal enrichment. So we've got a palladium-rich layer, we've got a gold-rich layer, we've got a copper-rich layer, and the copper and gold looks like it overlaps. But by far, the most dominant thing here is copper. The copper in the soils is up to 0.3, 0.4%. So standalone, each of these elements on their own would be a compelling drill target, but we've got them all there layered over the same intrusive system. And we're the first company to drill this thing out systematically. So 5 holes there historically. We'll drill a fence right across here and right across here. So this is just a little zoom in on the Dante reefs. And you can see here that historically people thought they were quite thin. Maybe that's why they didn't drill them. And no one ever thought there was any copper in these reefs, which is quite interesting because the first 2 days that I spent out there on foot, I found 6 or 7 gossans which had copper in them, which I'll show you. But every rock you pick up along this is going to be mineralized. And I'm finding zones here where we're getting 40 meters wide of outcrop, right? So in the bushveld, you're getting 80 centimeters, maybe a meter, 2 meters. But we're seeing up to 40 meters here. Now, that may be a series of stacked lenses together. We don't know yet. So we don't know that it's all solid, but it doesn't matter. We're starting to talk about some pretty significant mineralized widths, and certainly there aren't many examples globally where reefs are produced this wide. So we're in the process of drilling all of these out now to understand them a little bit more. We'll drill about 10 kilometers, 10,000 meters of strike over the 23 kilometers of these reefs in the first program. And as I said, there's a very interesting mixture of metals in these things. Now, the copper that we found, I'll show you on the next slide. You can see I spent a couple of days out there. There were some companies that had this ground that spent 7 years just looking for copper, never put a single hole in the reef. But finding these gossans, once I got my eye in, found several gossans, we've got a bit of a hypothesis that along the hanging wall of this reef, that there's gossan development, there may be copper mineralization, and the reason people didn't quite see it is because the reefs are soft, the gossans are soft, they've weathered away, and they only pop up every now and again. So one of the other things we're testing, apart from the platinum, palladium, and gold potential here, is also this copper potential, which we think the reef might be a bit of a dark horse. So we also have a huge amount of EM targets that we are only just scratching the surface looking at the moment. Right now we're drilling all the outcropping high-grade targets or mineralized targets which are sticking out of the ground because it's low, I would say low-hanging fruit. But we also have a pipeline of EM targets, sulfide targets that will come into the drill program over the coming months and years. And you can see every star there is an anomaly, an EM anomaly. This is from the old BHP and Anglo-American data. And we'll work our way through these over time. We're doing good things out there in the town. You know, we've invested a lot of time and money in building a strong relationship. We've got a house in the town of Jemison. We're putting community barbecues on. We bring school supplies, educational supplies out there. We're employing people, and we've got a permanent presence there at the moment. So we've built a really good relationship with the Nunanjara people, which we are very happy with. We're going to continue that investment into the community as we proceed. So really Dante is our 95% focus. We also have a lithium project that's quite compelling in its own right. It's early stage. It's just on strike with the Mount Holland deposit, which is a 186 million tonne lithium deposit. We ran some soils and we nailed a big lithium anomaly right on the structure where you'd hope to see it. So we'll progress this organically in the background while we really focus on the Dante project. And finally, our Onslow copper gold project. We have done some drilling here last year. We've just completed some detailed logging of that because there was some unusual alteration in it, and we're about to send the assays off to the lab for that as well very soon. So just in summary, the Dante project is our focus. It's a copper, gold, platinum, palladium project primarily. We have big outcropping targets. We're in the land of giants. We're surrounded by major deposits. There's barely been any drilling. We're the first company to systematically drill it. The assays are at the lab. The first lot of assays are at the lab, and 80% of the program is still ahead of us. And we're aggressively drilling there and likely to expand the drill program in the coming weeks. So thanks everyone for listening. I'm at booth 10. I'll be there for the next 45 minutes before flying out if you want to come and hear a little bit more. And that's us kicking goals in 2024 and beyond. Thanks.
That is a great picture. That looks like my primary school footy oval when I was a kid growing up in Kalgoorlie, red dirt and all. Next up, we have got MTM Critical Minerals. Now, they're focused on the development of niobium and rare earth elements in Western Australia and also in Canada. This is their Managing Director, Lachlan Reynolds, and he's joining us for an update on the work at their flagship POM project, which is in Quebec, and the recently acquired tenements in West Arunta. But wait, there's more. And this is interesting. And once again, it's in keeping with this innovation thread that we have going through the conference. They're currently negotiating the licensing rights to an early stage processing technology for REE and precious metals. It's known as flash joule heating, and they're looking to commercialise it. So, Lachlan, tell us more.
Thank you very much, Chrissy. Hello everyone, and thank you for sticking around. I appreciate your dedication to stay to the last session. Yes, as Chrissy said, it's my pleasure to introduce the MTM Critical Metals story to you this afternoon. As she said, we are a rare earth element explorer and development hopeful with projects in both Western Australia and in Quebec in Canada. I've got a lovely picture here of some of our ferro carbonatite with the red coloration there is high-grade rare earth element and niobium mineralisation. But yes, we also have a slightly different offering to what's been on stage in the sense that we've just invested into a technology option and are in the process of settling a license agreement with the developers of that technology, which was Rice University in the United States. And we see it as highly complementary to our mineral story. So I'll take you through that now. So I guess probably the key thing for MTM as a company is that in late last year, we agreed to acquire a company called Flash Metals PL. Flash brought, beg your pardon, Flash brought this West Arunta project, which of course is in a very hot exploration area in Central Australia. There's been several talks about the work that's going on up there already for this conference, and so I'll give you an overview of that. There is the flash dual heating technology, which is a very exciting, or to me as a humble exploration geologist, a very exciting technology using basically an electrochemical process to treat materials as diverse as battery recycling, e-waste, and also to larger scale industrial waste streams like coal fly ash and bauxite residues. So we see a huge opportunity to take this technology from a research project through to commercialisation, and we see a whole range of opportunities for dealing with a burgeoning waste problem that we have in our society, but also potentially an opportunity to look at the implementation of this technology into the mineral processing field, something that hasn't really been tested at all yet. The deal also came with additional ground in Western Australia in the Mukinbudin region. We have just, literally in the last couple of weeks, we have finalised these agreements, and capital raising to help us take all these projects forward has literally closed in the last couple of days. So to the West Arunta. As I said, there's been a number of talks at this conference about the excitement that's been caused by the discoveries of particularly niobium mineralisation in the West Arunta, and that's largely been by WA1 and Encounter Resources, who have been working steadily up in the region for the last couple of years. And in fact, there's been around, I heard a number quoted which matches my own, somewhere between $50 and $70 million of exploration expenditure dedicated towards this region. It is very remote and it has been kind of neglected from an exploration perspective. The recent discoveries of carbonatites and the niobium mineralisation that they contain has really re-energised the entire region, and not just for those specialty metals, but also for things like copper and gold. So there is a very strong exploration effort going on there, and despite its remoteness, the geology is very prospective and it's likely to generate new discoveries. We, of course, would like to be part of that story, and we now hold 3 tenements, 3 exploration licences in the region. We're right next door to WA1 and Encounter. We would like a slice of the action that they've been seeing, and we now have the ability to undertake our heritage agreements and get on the ground, and also undertake the usual kind of work like reprocessing of the geophysics. We will probably fly some more geophysics to allow us to target for mineralised bodies, and as soon as we can, we'll be progressing that exploration campaign. The flash dual heating, I need to try and explain this to you in simple terms. And as I said, I'm a simple geologist, so it should be easy. We see this as a tech which has application for rare earths, for other critical metals, for the recovery of precious metals. As you can see there, it could come from a number of different sources, and the whole process relies on basically us being able to increase the scale and thereby show the commercialisation of the technology. The actual flash dual heating is this setup here. As I said, it's an electrochemical process. In general terms, a sample is hooked up to a series of electrodes and subjected to a high voltage pulse of electricity. That pulse causes rapid heating and then rapid cooling of the material that's being treated. And that thermal shock has a couple of effects. One is that it volatilises some of the metals in the sample. That is, it's basically boiling the metals and turning them into a gas, which can then be directly recovered. It can also be boiling off undesirable elements and so can concentrate the material of interest that we're after. It also appears to have an effect of breaking apart the refractory metals that are in the sample, which leaves it much more susceptible to a traditional acid leach. So in some ways, this technology has the potential to be a direct capture of critical metals from high-value waste streams. It also has the potential to be an addition to existing recycling technologies simply to make them cheaper in the sense that they will use less reagents and create less of a secondary waste stream. Now, the technology itself has been developed by a group at Rice University in Houston. I visited them just a couple of weeks ago and they have some very, very impressive facilities. The main guy is a professor called Dr. James Tour. He and his group have been prolific in generating new research ideas and subsequent patents. And there is also a history of taking those ideas and putting them into the commercial world and seeing them advanced. A key one that you might know of is Weebit Nano. It's a different kind of technology, but it certainly demonstrates that there are a number of, the group has a reputation of taking ideas and seeing them become real-world technological solutions. We are currently negotiating a global license agreement over a number of patents, and that process is likely to be completed sometime in May, if not before. And we are also at a stage where we have engaged with an engineering group, also based in Houston, who are developing a prototype for us that will then allow us to both test samples and establish the parameters for an effective potential commercial operation, but then also convert that into a realistic engineering solution for the technology itself. So I guess the question is, why would we do this? Why would we branch away from exploration? Here very quickly are 8 pretty good reasons to do that. A key one, of course, is that there are already ready supplies of material that need to be treated. I read recently that in terms of e-waste, approximately 60 million tonnes of e-waste was generated globally in 1 year, last year. About 1% of that material is being effectively recycled. So there is this huge opportunity to get involved into the recycling and recovery process of precious metals. It's going to be demanded by governments and by industry. So we're hopeful that we can take advantage of that very secure and constant supply of material and offer a cost-effective and sustainable solution. This is a bit of a look at the process itself. This is in fact flashing of carbon material to produce graphene. And as you can see, there is a very intense pulse of electricity producing the flash of our technology. And we're looking to build essentially similar kind of flash reactors and instrumentation to be able to standardise the process across a range of other metals. This is work that's being done by Universal Matter. They have a pilot plant about to start operating just outside of Toronto, something else that I was fortunate to visit just a couple of weeks ago. So the technology is real, it's moving into the commercial world. We will be able to learn from some of the work that's already been done and are looking to fast track this process as we move forward. A couple of other comments about our exploration program. Our POM project is something that we invested in Canada about 12 months ago. It is a carbonatite-hosted rare earth project. We spent about $2 million there last year and had a very successful exploration campaign which defined very broad zones of rare earth mineralisation. We know that we are sitting close to an existing rare earth deposit, and we've got a very highly mineralised system in the area that we're drilling. Further work planned there for this year, which will be implemented once the Canadian summer gets established. We're also working on rare earths in Western Australia, as I said. Our key project is out near Laverton in the goldfields, where we have a clay-hosted rare earth deposit. That's an area where we see district-scale rare earth anomalies, huge amount of rare earth mineralisation being concentrated in the regolith profile out there. And it's something that we are continuing to actively explore and test the metallurgical characteristics and so on, just so that we can establish the baseline for what could be potentially a resource for us out in Western Australia as well. A little bit more on POM. The project is, as I said, it's in Quebec. It's located about 200 kilometres to the north of the city of Val d'Or, which is in the Abitibi Gold Belt. So we're very close to existing mining infrastructure and all the services we could require. We can drive to this project, which is a huge advantage in Canada. It's on gentle terrain, which is being logged. So we have extremely good access to our project, which makes the whole process of exploration substantially cheaper and easier. What we saw at POM, as I said, was this very large mineralised system. We certainly have some zones of exciting grades. And our challenge for this coming year is to basically focus in on the highest grade zones of mineralisation and look to make a rare earth discovery that could potentially be economic. A lot revolves around the metallurgy of the deposit. And again, we've got the opportunity to piggyback on our neighbours and what they've learnt about the mineralisation locally. Quick cross-section. I'm not going to go through these intersections in detail, but just to give you a sense of scale, these drill holes are very deep, 600 metres, 550 metres, 400 metres on the right-hand side, very broad zones of mineralisation, and locally some excellent grades within that give us a lot of confidence that there is a resource to be found at POM. At East Laverton, again, as I said, regional development of rare earth mineralisation. We've done an amount of drilling out there that's only partially tested what opportunity there is. We certainly think there is a great scope for development of a large clay-hosted resource. Again, a lot will depend on the metallurgical characteristics of that material, and that's something we'll continue to work on throughout 2024. Here's our Rogues Gallery, myself as Managing Director, supported by a very experienced board and management team. And a quick snapshot of the company. The key thing here to say is that we have just finished capital raising, so we've got about $5 million in the bank, we have no debt, and we now have the funding that we need in order to progress both sides of our story, the one side being the exploration both here both in Western Australia and in Canada, and of course the effort that we'll put into the engineering on the flash Joule heating technology. And on that, I'll say thank you very much.
Thank you very much, Lachlan. Right, now I said to you, I think earlier in the day, maybe even yesterday, that the last talk today was definitely one worth coming and listening to, and it's due to the person that's about to take to the stage, and I find her to be a real inspiration. You know that saying that if you find you're doing what you love in life, then you're never going to work a day in your life. This lady is one of those people, and she has somehow managed to astutely amass a vast portfolio of ground which other people have, and I will say stupidly, left untouched for many, many years. So it's up north, we're talking Western Australia is the direction we're going to. This is Rita Brooks. I should introduce her properly. Rita Brooks, everyone. She's listed the projects in her Tambourah portfolio back in 2021, so it's relatively recent, but they've developed an advanced portfolio of gold and lithium projects that are now starting to show results. And I think that your share price has adjusted itself accordingly in the last couple of months as well. So Gold Discoveries at Tambourah and TMB are also working with the CSIRO to use machine learning. So they've got innovation in there as well to identify and test target areas at the Russian Jack Lithium project. So let's hear what she's been up to recently and see if this is something that you would like to jump on and follow with her. She is a very tenacious human being. Please make her welcome.
Thank you for that kind introduction, and thank you for everyone staying to listen to the story of Tambourah. It'll just take a while to load.
You're going to say maybe it's not a lithium battery, maybe it's one of those old boring batteries. Hold on. It's true, sometimes this happens. It's the last one there. Fellas, can I grab another one of these up there, or would you mind just following Rita if she sticks her hand up? Right, if you pop your hand up, then the boys down the back can do the chain. Now, if you stay here, Rita, put your hand up, the boys can follow you until we can rectify this issue. Okay.
Well, it's certainly been an exciting few days, and everyone's had a great opportunity to learn about several different commodities, but gold has taken centre stage this year, and lithium's following closely behind. Any luck? Yeah, nearly.
Sorry, Rita, your presentation isn't opening, so we're just working on that right now.
It's not opening.
Ah, so we're going to have to do it by memory. Can you do it by memory? That's
we'll
going to be disturbing. Memory. I'm sure that's completely within your realms of possibility.
Yeah.
Are you okay with that? All right, we put your hands together for Rita and we'll see how we go.
We'll just start. They'll reload it, I think, but it'll get there. We've got a portfolio of several projects for gold in the Pilbara in particular, and to name Tambourah Metals takes its name from Tambourah, the gold field. We assembled the 30 prospects that were historically mined in 1890s, and as a result, they were 1 ounce per tonne gold mines, but they were always jointly held in different 200 hectare leases, but now we consolidated that and raised $8 million in August 2021. So as a result, we've been able to go there and drill, and in particular last year, our second drill program, we drilled the Tambourah King, which was a 1 ounce per tonne gold mine, but we hit a metre at 28 grams a tonne, and that was only at 70 metres, and above that we hit at 50 metres, 2 metres at 18 grams. So needless to say, that will be our next drill focus when we go back in June this year. And the World's Fair was one area that we hadn't drilled, but interestingly enough, the story of De Grey mining, you know, has 10 million ounces of gold in the Pilbara in the last 10 years, and the World's Fair in particular is around a granite core. So we're very interested in following up on some initial drill targets there. So that area, over the 30 historic gold mines, is 2 that we're going to focus on again. And going further south to a called Paraburdoo. Here we are. Well, in particular, the company, we'll just quickly go over that. That just shows you the non-exec directors, Wayne Richards, who has extensive experience bringing projects into production, and Bill Marmion was on the state government as a minister for several years, including state development, and he did mines, petroleum and transport. So he joined the board at the end of last year. So, and Graham Smith is the company secretary, and we've also got Bill Clayton, who joined this year as geology manager. So we've got a good experienced team ready to get on the ground. So our share price has languished. It's about 7.5 cents now, but we've still only got 80 million shares. So we're very small. We've got 2.9 in the bank, ready to develop these projects. Really, the Pilbara has been a standout for lithium, for tier 1 lithium mines being discovered in the last couple of years, and also Wodgina and Pilgangoora as in particular mines that are working, operating now. And then when you look at our ESG compliance, etc., we make that a very important part of our program. So we'll just quickly summarise the Pilbara projects. I mentioned Tambourah Gold. Down the south, you can see the Chila Gold Mine, and that gold project lives on the Nanjil Gandhi Fault. And the Nanjil Gandhi Fault has 5 million ounces in 3 deposits. So that's an area that we're looking for the elephant hunting, but we've got a lot of gold targets there already, because the area was previously explored by Newmont for base metals, but we've got their gold historic data. Over at Russian Jack, the Nullagine and the Haystack Well, we're looking for gold at Nullagine, and at Haystack Well we've had some great extensive pegmatites, but some of our grades are up to 7,000 ppm, and we're looking at getting back there and drilling. And Shaw River is one in particular. If you look above the word Pilbara Minerals at Pilgangoora, there's a project called Tabba Tabba Tantalum, and that's been recently drilled by Wildcat, who have discovered another tier 1 deposit of pegmatites, that spodumene-bearing pegmatites. And so that's closely looking like it's going to turn into another exceptional deposit similar to Azure, which you've heard about this week. So in particular, our Shaw River is an extensive tin mining area, tantalum and tin, and none of the pegmatites have ever been sampled for lithium. So I'll go back to the gold, which I did speak about. So that just gives you an idea of working in the area. It is only about an hour and a half from Port Hedland, so access is exceptional. And the 5 metres at 6 grams included 1 metre at 28. And you can see the Tambourah King is halfway down there. So those mineralised zones were only prospected and mined from the surface, and there hasn't been any extensive drilling throughout this area. So we've got over 400 hectares here that we're turning into a mining lease to progress that. To the north and to the south, we've found some pegmatites. We haven't found any extensive grade, but at Tambourah North, we've had up to 1% lithium. That's the list of drill results that you can see this on the website. It is posted, so I won't go into the details, but those target areas are around that edge of the granite, and we're looking forward to drilling there. That's the Chila project. That's 70 kilometres long of that Nanjil-Gandhi fault. So if you have a look at this area, we surround the Electric Dingo, which is 20,000 ounces, and that's owned by Black Cat, which is 70 kilometres to the northeast, and that's where the processing plant is for Black Cat. So we think that anything we find here, we'll be able to mine. Our target is 8 metres at 8 grams at 88 metres in depth. So that was one of the historic drill targets that was identified when they were looking for base metals. And you can have a close-up here of this on the website when you can look at these drill holes. And remember, they were looking mostly for base metals. So there's some of the other drill holes. I won't go into it, but very exciting targets. And we also, the Electric Dingo is excised from our tenement, but we do have 70 kilometres of this fault structure to investigate. When we go over to south of Nullagine, the Russian Jack project, that's the size of Taiwan. Actually, it's larger than Taiwan. So that gives you an idea of the area that we have of untested pegmatites. The clues are tin and tantalum, and Haystack Well sits to the south west of that corner. So some of these areas we've had 1% lithium in a biotite shear, and we're going to continue testing that. Some of our recent results show we've used drone surveys, and it's been really remarkable to pick out some untested pegmatites over vast areas. We've been working with CSIRO doing machine learning on some of these target development, and some of their reporting will be available in the next couple of months. So the Shaw River, you can see that is closely in this top left there. So Shaw River is the extensive tin mine. Tambourah North is where we've had 1% lithium, and Russian Jack, we've also had some rock chips at 1%. In particular at the Shaw River, it was an extensive alluvial tin, 6,000 tonnes of tin. Tin, even now, there's 5 kilometres of dumps that we will test to see if that's worth. Tin is 25,000 US a tonne, so we've still got some potential there. But the main thing is doing the sampling, we've had up to 4,000 ppm in lithium. And this is an example of the drone survey. So if you go back to that top left, figure 5, that area, we haven't been on the ground there, but some of those pegmatites are 700 metres long. So we've got some exciting targets to get on sample and follow up with drilling. And the same at Haystack Well. The previous historic data showed extensive soil sampling, 500 ppm, 200 ppm in most of those areas, and we've followed that up with sampling of 4,000 ppm lithium, and in some of the biotites we've had up to 1%. So these areas, I understand that lithium is still a needed commodity, and we're still including lithium in our exploration portfolio. Finally, we do continue to expand our lithium portfolio and our gold, but in particular this area is TG6 is sitting to the west of us. This was identified from pegmatites that historically were documented in previous reports, and we're looking forward to getting this granted. To the north, that purple area, it's Rio hold that area, and they've done a joint venture to spend with Charger up to $40 million on a joint venture there. So this area is one that's continuing to grow, and TG6 in particular have had some great success to the northwest. So I look forward to bringing you some more news about those in the future. At Tambourah Julimar North project, in July last year, we entered a joint venture with SQM. SQM are earning initially 50%, spending 1.5 million, and SQM are looking for pegmatites. From previous drilling, there was some historical tantalum there, and so they're going to get up and do some, I think they've commenced, or they will be commencing shortly, doing air core. They've had access agreements, and that is the area that just is sitting north of the Chalice deposit. Tambourah Nullagine, it's extensive gold prospects, but there was historical tin, and as a result, nobody's tested for lithium pegmatites, nobody's even prospected there. So that we'll do that at the same time when we're down at the Russian Jack area. And that's our busy work program coming up. You can follow that and look forward to some good, strong news results from Tambourah in the coming months. We've got advanced gold, looking forward to doing our next round of drilling at Sheila and at Tambourah Gold, and getting on the ground and getting the results of some of our CSIRO collaboration, and also bringing you news from our Julimar SQM JV. Thank you very much.
I actually wasn't going to ring the bell then. I thought you deserved all the extra time that you got, but I knew that you would handle it well because you know the story inside and out, and it's really interesting. I was up at a place called Marble Bar in the middle of last year, and they had this race day called the Marble Bar Races, which is quite an event if you're ever out that way. There's quite a lot of lithium around Marble Bar at the moment they're finding. It used to be gold, now lithium. And I had the good fortune of going past some of Rita's sites, and it's looking good. Lots of things happening out there, lots of things indeed. Right, I'd like you please to join me in welcoming this gentleman up onto stage. So we're rounding out our presentations. We do have a panel session to complete our day, but this is Rachet, and he's the Senior Vice President of the Shanghai Metals Market. He and his team have been here since the very start of the conference. They've been having some very interesting and thought-provoking talks with people, and they provide a lot of great information to people. I've actually myself followed them on my LinkedIn profile, and there was a really interesting piece that you wrote about copper and what copper's starting to do as well. So it's a great team to follow for information and insights, especially into the ferrous world of commodities is what you're looking at, Mr. Hugh. So without any further ado, would you please make him welcome and listen respectfully to his insights. Thank you.
Okay, thank you all. I'm Rachet from Shanghai Metals Market, based in Shanghai. And I believe that in the last 2 days, you have heard a lot of projects mainly focused on these kind of primary resources. So as the last presenter, I choose a topic from another angle, which is recycling, mainly based on the secondary resources. So as you all know that with this decarbonization trend, more and more resources are facing this kind of carbon emission high carbon emission issues. While if we take a look at from another angle, this is all recycling material. Compared with primary resources, they have low carbon emission, low cost collaboration, and also they have their bright future in the next few years. So today, I'm very glad to be here to show our understanding about the global lithium battery recycling markets. Yeah, first let's take a look at the market overview. Here is our, we call it a recycling value chain. We divided the scraps into two types. First is production waste. Secondly is from end-of-life vehicles. So from production waste, we can see that different type of waste, like a battery pack, module, cell, tablets, and black mass. They can generated with the production process, like CAM producers, like battery producers. They will all produce some battery scraps, as seen in the figure. Besides that, after usage, you can see that end-of-life vehicles, we have to do, even some of the vehicles can have a second life to de-utilization, but finally, they will go to the end of life and to be processed by recycling companies. So from this point of view, that's the production waste, sometimes we call new waste, and the end-of-life vehicles, we call the old waste. This all will become material for recycling companies and go back to a closed-loop strategy, closed-loop value chains. And if we take a look at last year, we believe that this kind of end-of-life vehicles still not very enough to support this kind of recycling companies. The main raw material is still from production waste. It's counted for more than 55% of the total waste generated. Another 45% is from this kind of recycled end-of-life vehicles or some storage batteries. But if you take a look at this figure, you can see that the recycling value chain is very complicated. Even from this kind of production waste, it can be directly sales by lithium batteries to recycle companies, or from OEMs, or from CM companies. But there is a lot of traders at them. So which these kind of traders involved in the market to make the market more complicated. Besides the old end-of-life lithium batteries, the channels is much more complicated compared with production waste. While according to our research, that in the next few years, with this technology improvements, this kind of production waste definitely will still increasing, but this kind of technology improvements will make this production waste growth is very limited because they have to produce more qualified products instead of this kind of, to reach some less waste. While for this end of life, this kind of vehicles, as you all know that, especially for electric vehicle was booming since 2018. And according to our research, this LFP or NCM batteries usually has a life cycle about 6 to 8 years. So from this time, from 2024, we can see more and more this kind of NCM batteries or LFP batteries will be getting into recycled. So we believe that in the next few years, like by 2025, this kind of end-of-life recycling materials will account to more than 60% of the total scrap generated. Here is our forecast for global recycling materials in the next several years. We can divide it into 7 stages from 2020 to 2025 because this kind of NCM batteries mainly used in China, especially in vehicles. So we can see that China NCM, especially for a red circle, you can see that it's have a high growth rate of about 38% because the original these vehicles is mainly produced by NCM, and it will be getting into retired in these 2 years. And after that, after 2025, you can see that with the very fast LFP batteries increasing to replace some NCM, this kind of market share since 2020, currently, especially in China, there are more than 70% of this kind of vehicle batteries are using LFP technology. So after these kind of batteries get into retirement, maybe after 2025, we can see more LFP batteries will be retired from the market to supply more this kind of battery scraps in the markets. While if you take a look at outside China, for Europe, for USA, this kind of NCM battery is still the mainstream because of these kind of different reasons, different factors, while NCM is still the mainstream. So we believe that after 2030, outside China, especially for Europe, for American, this kind of batteries will be entered into the recycled, and NCM will still be the mainstream for this kind of recycling markets. So from different stages, by 2025, NCM in China will enjoy the high growth rate. After 2025, by 2030, LFP recycling in China will dominate markets. And after 2030, NCM in Europe and in Americans will be enjoying high growth rate to support this kind of scrap generated. Besides this kind of scraps, there is another product we call black mass. Black mass is a very hot topic because you know that in Europe currently, as if you take a look at the figure, in Europe and in US, there is a lot of black mass exported to like Southeast Asia, Indonesia, or to Japan, Korea. Because as we know that for for Europe, there is not enough, this is called hydrometallurgy process to further processing this black mass, while almost all these kind of facilities and technologies are concentrated in China, while China don't allow to import this black mass currently as a kind of waste. Well, so this kind of black mass was generated in US and in Europe, where it goes to Indonesia or Korea for further processing into different raw materials, which is a very low price compared with China domestically. Last year, we have a conference in Hungary when we talk about with a lot of companies. We can see that a lot of recycling companies will be construction in Europe, while for them, their lack of technology. So they want to cooperate with Chinese companies to investment. China companies provide the technology, they provide the source of batteries. So it will see more and more black mass will be generated and further processing within Europe or within US. But this kind of trend will also supported by government. Like we talk with VDA, the Germany Auto Association, they will push government to issue some policy to forbid this kind of black mass export. They want to visit this kind of Europe. That also meets like Europe's Battery Act. It requires this kind of recycling materials targets percentage. While China still dominates the black mass production, and we can see that more and more this black mass will be processing within the region, within Europe, within the US, and within China. Here is a really trend for total batteries. If we take a look at the last, there are several typical, this kind of we call recycling companies. Recycling companies, actually, they have some different background. Some are subsidiary of batteries, like a bump, is a subsidiary of CATL. Some, like it's usually to be a recycling company, like Green, GM, recycle everything, recycle electronics, recycle autos, everything. Usually, like this kind of copper, aluminum, steel are their main products, but now they enter into this kind of battery recycling industries. So we can, from this figure, we can see a lot of key players. They are not only producing their raw materials, mining, refining, battery, they also enter into a recycling market to enjoy the potential high growth in the next few years. While China government also noticed this kind of trends. As an example, that if we take a look at currently this kind of batteries, it reminds me that in 10 years before, that if we take a look at lead acid battery, at that time, China has thousands, even millions of these kind of participants in lead acid recycling. And according to our research, at maybe 2012, more than 80% of this lead was produced by the unqualified companies. But long after 10 years, if you take a look at lead acid battery recycling, more than 90 was produced by qualified ones. So at the beginning of this kind of vehicle, lithium battery recycling, China government has issued some, like we call it white list. Currently, 5 ventures has been issued with over 150 companies have got these kind of qualifications. And according to our latest research, there is no more this kind of white list will be issued in this year. So these 150 companies will be enjoy the high growth of this kind of scrap generation in the next few years. While if we take a look at these 150 recycling companies, not all of them can do this kind of dismantling. Some of them, especially maybe over 50% of them, just do the second digitalization business, while another 50 of them will be the dismantling and recycling. According to our research, because of this so many these participants, which looks like the lead acid in 10 years ago, more than 500,000, 50,000, these kind of participants currently in China participating in these industries. But it will be soon, we can see that more policies will be driven. This market is going to be more mature and more qualified. And we can see more this kind of scraps will be generated and flow to these qualified companies for processing. There are different models. If we take a look at these different companies, we can say that for module A is like bump. It is subsidiary of CATL batteries, and they sign contracts with BMW. So they construct this closed loop strategy. While for Huayou, it is used to be a material company, so also they can enjoy this kind of closed loop with Tesla, BMW. While GM mainly focus on this collection business, they still have some further to do the chem or even batteries to achieve this recycling closed loop. Here we want to emphasize that Helan, Zhongxi, this kind of little small plants, they don't have resources, and they also haven't partnership with the batteries. They are the most, we believe that maybe these kind of companies will be excluded market in the next few years. Another example is the Model E, is SDM. It has a new technology which produced with repair. It's not a dismantling and hydrometallurgy. It's used repair technology to use these kind of scraps. Pricing, I have to say that pricing is more prevalent in the market. For the scrap market, used to be as a cobalt. Because of the lithium price surged, also lithium was also involved, and they use different, these comparable rates. And currently, when we talk with these recyclers, we can see that they are not taking about this nickel, cobalt, lithium. They also taking consideration of graphite, taking consideration of electronic aluminum foil. So all of these elements will be taken into consideration when you buy the scraps, and it gets more and more transparent. Here is some list that a lot of China white list companies they will use SMM price to serve. Here is their file to support. They will use SMM price when the subcontractor buy this kind of purchase. Besides that, we also have some technology difference. Actually, here is listed 3 different technologies. Mainstream is from the hydrometallurgical process, mainly used by Bump and Huayou and GM. You can see, even for these companies, they are different. Some will use pre-lithium extraction, some use the post-lithium extraction. Currently, as we know, that the lithium, pre-lithium extraction has a higher, this kind of elements recycling rates compared with other regions. So Bump has a relatively advanced technology. They can get more lithium, as much as 92% of lithium recycling. Yeah, maybe just 1 minute, sorry. The last topic is for footprint. To summarize, we believe that this kind of battery companies has the advanced technology to supply this footprint. And is our conclusions. If you take a look at this kind of different technologies, that the carbon emission is 2.8 for hydrometrical post-lesion. Hydrometeorological for pre-lesion is 2.3 and 1.7 for LFP extraction. And the last point I should point is for a lot of junior miners, as not only provide pricing data and also we provide this consulting services. That's what last sentence. We provide this dynamics with help you to do scope study, help you to feasibility study, and we are to do this market dynamics and for price forecasting for all of you. Thank you. Due to the time limit, very thank you.
You never knew you could speak that fast, did you?
Yeah, it's never.
Thank you very much.
Thank you.
Appreciate it. Thank you very much for rounding out our conference. Now, team, we have one last panel to share with you. We've been talking a lot about governments and their involvement in different mining projects, how they have been helpful, how they could perhaps be a little bit more helpful. So we thought that would be a good topic to end off on today. And we've got a number of esteemed members on our panel to introduce to you. But I'm going to leave that job up to Ray Restorer, who's an analyst from Bloomberg NEF, and he is going to introduce them to you and lead this final panel. If there's anything you would like to ask, I will, as always, be over in the corner there with my microphone, so just throw your hand up and I'll race across to you. Welcome to you, Ray, and welcome to your team of experts.
Thank you for that kind introduction, and a pleasant afternoon to everyone. It's been a long 3 days, but I believe we cannot end the session talking about the future of metals and mining in the energy transition without tackling the realities behind the policy support and government initiatives that are needed to secure the supply of these critical minerals and metals. And with that, I'd like to welcome our very distinguished guests on this panel. I'd like to start with Muktazar, who we've heard from on day one. He is the head of sustainability from Nickel Industries Limited. I'd also like to welcome Scott, who is the managing director of Blackstone Minerals Limited, who we also heard from on the afternoon of day one. And lastly, Gloria Zhang, director from Resource Connect Asia. I'd like to introduce them on my own, but they would definitely do a better job. And I'd like to get the ball rolling that, together with your brief introduction, kindly tell us how your experience is in terms of navigating the policy landscape within the countries that you operate within the region. I guess I'll start with Scott.
Yes. Thanks, Alan. So at Blackstone Minerals, we're looking to develop a vertically integrated nickel mine and refining business in the north of Vietnam. We've been operating in Vietnam for around 5 years now. We previously operated in, we've had a lot of success with the Vietnamese government. It's been an interesting to what is, I think, one of the most exciting markets in this region, in Vietnam. There's a lot of foreign direct investment into that region and policy support we've had from government, but also the Australian government as well. So we've got a really strong relationship with the Australian ambassador. He's been very supportive of our region, and it's been a really exciting time up in the north of Vietnam.
Thanks, Scott. Maybe you can go ahead, Muktazar, for Indonesia.
Yeah, thank you, Alan. So I'm Muktazar, head of Sustainability Nickel Industries Limited. We are one of the producers and the largest nickel producers in Australia. So currently we have 5 operating assets. All of them are located in Indonesia. So we are exposed to a couple of major jurisdictions. I can say Australia, the country where we are listed, and also Indonesia, the country where we operate. And I think in terms of the government's role, especially in the energy transition, I think it's very crucial to our business. So the government has provided like tax relief for the development. And yeah, as I know not everyone might agree with this, but Indonesia has launched the resource nationalism policy thing, and it was enacted in 2020. But yeah, I think from my point of view, the resource nationalism. It also helped, I think, to reduce the carbon emissions related from the nickel production, because, you know, like in the past, Indonesia export a lot of nickels ore, I mean, and 1/3 of them is water, but now we process it domestically and only export the product. So I think maybe that's for kickoff.
Thanks. And finally, Gloria.
Thank you for the opportunity to be on the panel. My name is Gloria Zhang. From my surname, you can see I'm originally from China, Beijing and Shanghai. Also, I worked and before moving to Sydney and WA. I live in WA for 20 years. It's a finance and mining industry keep me so excited, that opportunity to. And Resource Connect Asia is a platform to serving as a catalyst networking and investment opportunity in the region. And obviously, a future-facing commodity bring us this platform for us all together, present our project, explore the opportunity and partnership. In organizing the conference, I'm lucky to work with Stu McDonald, Warwick, and from North Point Equity, Tribeca, Argonaut, and as a team, also a lot of other supporters and sponsors. It's not an easy journey, must admit. What we have these 3 days goes by really quickly, but behind the scene, the work is tremendous. And also help us understand the success, the failure, the struggle that we're all going through developing the critical mineral industry. And also by working in China, ASEAN region, I understand the government leadership plays a very important role, the policy, the regulation. There's over 130 countries committed or contemplating committing to the carbon zero policy. For me, that look at as an industrial revolution, similar to what's happening in the 18th century, 19th century, 20th century. It's got to reshape our life altogether. And obviously, this journey is not going to happen overnight or within the year. And in the ASEAN region, it is, as a whole, is one economic entity. We hope by 2050, it will be the 4th largest economic area in the world, following the EU, following North America and China. However, this region also have a very large labor force, and different to European Union is we have a very different currency. It's not one currency. So this region presenting a lot of opportunity and also exciting cultural experience, see how each country operated. Although ASEAN region presenting its opportunity and the potential, also a lot of work each government have to do to bring ourselves carbon zero ready and going through the renewable energy transition.
Thank you very much for all the concrete details and, of course, introducing yourself further. And I'd like to note that even when you are operating in a certain specific jurisdiction, such as Vietnam or Indonesia, both Scott and Muktasar already mentioned that the support from Australia, for example, has been really helpful in navigating challenges, I would say, policy. So I'd like to start with this first theme on how the current global critical minerals policy landscape is, and maybe ask you about your thoughts on how it is shaping the current narrative related to overall the region. Yeah, maybe I can start with Scott again.
Yeah, so I suppose on this theme, it's one of the biggest policy changes in the recent times has been the Inflation Reduction Act. And I've never it's been moved around the world based on a policy. And the amount of change that has brought to our industry has been saw it firsthand. We are working through a joint venture process at the moment. And as soon as that IRA dropped, it completely changed our partners' focus. They were completely, I suppose, rattled with their strategy. It threw a massive change to the way the battery industry is. So we, unfortunately, don't have a free trade agreement with the US, and that has been a major issue for us because of this focus on the IRA. And those countries that do have the free trade agreement with the US, obviously in a much strong advantage to ourselves in the Asia region. And I think it's a good example of what government can do to incentivise capital flows. And the amount of capital that has been flowing through that policy is quite amazing, and I think a good example of what we can do in the Asia region with a bit of collaboration. Europe's obviously got its own policies, but yeah, I think the IRA is a great example of policy capital in the right direction.
And for Muktazar, for nickel, which is one of the biggest things around Indonesia's own policy landscape towards investment, just recently when Australia added it to its own critical minerals list, given the challenges faced by that particular sector, how would you say that movement affects Indonesia's own sort of policy, still within the affecting the region?
Yeah, I think that's an interesting point of view, and of course, I think for us who operates in Indonesia, but also listed or established in Australia, we try to follow the government regulations from both countries. And yeah, I think perhaps at this point, maybe the regulations from Indonesian government affects us more because we have 5 operating subsidiaries there, and now I think the government want to move on from the initial downstreaming policy in Indonesia, in which initially the nickel, we focus on the class 2 nickel, but now we want to produce the class 1 nickel and to make Indonesia becomes a battery hub, I think, in the regions. And also from the global perspective, maybe this is not addressing directly your questions, but I would also want to bring the European battery passport regulations, because as we all know that nickel is an important ingredient to the battery, and yeah, for a company like us who want to enter the European market, then yeah, we also consider our carbon footprint. So recently, I think in the LME, there was a discussion about the green premium for nickel, but I think it was not successful. But from my point of view, it is something on the horizon and it will come. So yeah, I think the policy from the Indonesian government as well as the potential markets, I think Scott mentioned about the IRA, but yeah, same like Vietnam, Indonesia is not having a free trade agreement. So at the moment, I think that's not something that I will discuss further. But for the battery passport, I think from nickel industries, it also affects the strategic planning of us. And we develop the new latest technology with lower carbon footprint. So yeah, initially we focus on the pyrometallurgical process, but in the future we want to focus more on the HPAL technology that can generate nickel with lower carbon footprint. So yeah, I think just to run up my speech. So I think yeah, again the inclusion of nickel to the critical mineral list, I think in Australia at the moment, in my opinion, maybe it doesn't affect us so much. But yeah, of course, we also try to comply and also to meet the regulations from the market that we aim to explore and to penetrate.
Thank you very much. Very interesting. And Gloria, I'm sure in your time with preparing, even just for this event, several conversations have been had surrounding critical minerals policies as well. Would you mind sharing a bit on how that went?
Sure. I will just firstly talk about during the inaugural conference last year. We are very lucky to have the Australian Minister for Resources and also the Minister for Northern Australia, Honourable Madeleine King, to come here deliver the opening speech. And this year, because of Parliament hearings, she couldn't be here. We were very fortunate this morning during breakfast, we have the Australian High Commissioner, the Honorary Excellence Alex Cox was here, deliver his speech of the Australian government. We also, as many companies here from West Australia, we have the WA Trade and Investment and ASEAN Commission, have his representative Eric Tan, and we have the Canadian government. We also have the support of Singapore Tourism Board, Ministry of Industry, And we're also receiving messages from ASEAN Secretariat, government of Mongolia and government of Vietnam. So this support shows, first of all, government are very quick in act on leadership providing and sending the message. A lot of the ESG, renewable energy, carbon zero, understand what this means to it, what this means to my business. And I'm pleased to say when I was sending documents to China, I was told ESG do not need translation. Everyone knows it's a house word. Although China, lots of documents you have to translate. They say, no, you don't need to translate ESG. We all know what it means. That's very comforting to hear. I work a long time in China rare earth industry and lithium industry. Many factories I visited, it was such a good standard. China has been exposed to the world that the environmental management has been a problem for many years. And historically, people just do their own mining without a formal approval. And when they finish, just leave the mountain as it is. But over the past 10 years, the government really been strict on that, from the water management. Since China making the carbon zero commitment by 2050, we have a dual carbon policy, means carbon reduction, low carbon, carbon zero, even negative carbon. So they're really firm about how they want to do about it. And also the procedure is educational, show how it's done. And they also invest a lot of money from the government to technology about how to improve productivity cost, to promote EV car sales and convert people to use EV car and the consumer market education. That's quite a lot of money and effort. The government trying to get the message across. Also helping the company look at the tax deduction tariffs. Southeast Asia, they also have very good policy, the no tariff or nearly no tariff between the ASEAN countries. That really a good boost for the companies who trying to explore this market and see how it actually work. Because from the operational adjustment, for example, if the mine from Australia are operating fulfill the sustainable ESG standard, when they go into a processing country, it could be China, could be Southeast Asia, they also have this, we call it stamped identity. That means you fulfill the ESG standard. To fulfill that isn't easy, because I was talking to a company in China to say, you know, for me to put a stamp on, my supplier had to put it to a packaging box. So to get that means everyone have the same understanding, understand what is ESG, sustainability, carbon zero commitment means to the business. That means we really need to have a government work together, the region work together, and the company work together. And this dialogue need to carry it out for people to share the understanding.
Thank you very much. And with that, I'd like to, I guess, highlight ESG, especially within the metals and mining sector, which I believe is a key challenge, not only for the region, but also in general for the industry. Coming in a bit at the center of all these discussions, I'd like to know what would you say around the critical minerals policy and support within ASEAN as a region and within the countries that you have been operating in? How do governments in the region actually help drive growth within the critical mineral supply chain? I guess we can start in now. Yeah,
thank you so much for the opportunity. So Indonesia's story is quite like I have emphasized in the beginning. So nickel was a pilot, I'd say, but yeah, it's a bit different, I think, from a critical mineral policy. But yeah, the government call it the downstream policy. The idea was to increase the added value within the country. And I think it was initially implemented in 2015, although it was, let's say, temporarily suspended in 2017, and then was enacted again in 2020, because in 2020, we already have like sufficient refinery facilities within the countries. So the idea is that the government is aware about the world transition towards a cleaner and renewable energy solution. And they also understand that Indonesia has a lot of potential with nickel. So I think together with Australia, we are the world's reserve for the nickel. yeah, I think by working together in the past 5 to 6 years, using the policy that was set up by the government, Indonesia, I think was able to become the largest nickel producer country in the world. So I think we produce more than half of the global nickel production. And yeah, I think moving on, like I said, so if we just produce the nickel, the class 2 nickel, I think our resource will be depleted, and then now they focus on the class 1 nickel as well. But for us, for Nickel Industries Limited, I think we are probably not in the position to comment or to suggest to the government, but we see this as an opportunity for us to work with our joint venture partners. Yeah, we were part of the largest nickel processing hubs in Indonesia. So there are a couple of industrial parks, the IMIP and IWIP. I believe many people who are in the nickel value chain already familiar with that. And now we move on to our next step, which is to develop the HPAL with the lower carbon intensity. So our aim is, I think, aligned with the Australian government, I think, to achieve net zero by 2050. And yeah, I think, just speaking frankly, I think it's a bit faster than the Indonesian government commitment. The Indonesian government aims to achieve that in 2060. So we have to be a pioneer, I think, in our operations. But now I think we feel that as operations, and yeah, we are proud of what we have achieved, I think, so far. So we received some incentives, I mean, like awards, recognitions from the government, including the green rating in the past 2 years. And I think that's also something that hopefully can differentiate us from the rest of producers.
Thanks. And how is it in Vietnam, Scott?
Yeah, so I think our leaders back about 10 or 15 years ago, the Vietnam government came out with a very similar policy around downstream facilities, and I suppose I would say the carrot and the stick being a tariff on intermediate products. So in Vietnam at the moment, there's actually a 20% tariff on nickel concentrate. That tariff's even for copper, and so it's a C to Indonesia, where it's all about downstream processing, adding value in country, and we're okay with that because we have abundant renewable hydro power. We have an amazing skill to keep the jobs in Vietnam, and so very similar to Indonesia. Yeah, it's all about that downstream processing piece. Upskilling local people. So we are very much in favour of the downstream policies of the Vietnam government, and obviously it's done very well in Indonesia as well. So that, I'd say that one's the stick. The carrot that they do have in Vietnam, from a policy perspective, is very low corporate taxes in the early years of the project. So we'll be starting on 0% corporate income tax for the first 4 years. The next 10 years, it'll move to the ultimate corporate tax rate is only in Vietnam. So any analysts out there, that's very helpful for your MPV. Obviously, yeah, not having large tax rates in those early years allows you to pay back your capital quicker, and it's a really major to operate in Vietnam. But I'd say is it's not just the policies, it's the access to renewable power, it's the access to skilled labour, the education system in Vietnam. We're impressed with the level of skills of the geologists, mining engineers, metallurgists coming out of the unis, and the amount of students that we're getting as well. So we don't have a labour issue like the West. We've got so much strong labour coming through those unis, and just so impressed with that. And and that's really as good an incentive as any, is having good, strong, skilled labour coming through the universities.
Thanks. And you've already highlighted this earlier, Gloria, within ASEAN's regional framework of free trade. Now, in this final speed round, I would say, in 3 to 5 words, some final thoughts. We've already talked about the have a wish list to policymakers around critical minerals policies. What would you want for them to know?
I think I'll just follow the Australian foreign investment and government in terms of international collaborations, because it's obviously one country's job, it's not one government's job. And the collaboration between, because in ASEAN country, they're not just the supply chain, you're upstream, I'm downstream. They also have the resources of their own. So investment collaboration, labor force collaboration, trade collaboration, that certainly will encourage parties working together to do the best they can to put the best foot forward. When I was in China, they're put a lot of factory to automation, which is so clean. As one of my colleagues say, you can run your finger there, there's no dust. But that means you're sacking all your staff? No, you upskill them, train them into a machine operator. They actually learn new skills. And that's also cross-region labor on your labor force, as well as upskill. And also a lot of small business who play a key role in the trade and its industry. And the governments in education and support and tax benefit was certainly helping the small business to do their job. And institutional investors do concern about business, whether they can keep up the standard. With the education, proper training and investment, I believe we can. And the rest of it, I would say anything environmental, upstream, downstream, collaborate, and also the transparency in supply chain, which never happened before, that the end user can talk to the upstream and everyone making this commitment. This is so amazing. And I look forward to all the great things looking in.
And unfortunately, we do not have enough. And with that, I hope that was really helpful in thinking about the policy side of the equation, or to the future of the metals and mining sector within the energy transition with you all. Thank you very much.
Thank you so much to our panel. And Gloria, I think you pretty much summed up the event for us beautifully during your opening remarks, so I won't go back over that. But it's been a fun 3 days and I've done a really wonderful job. I think we're on target, as Stuart McDonald said, to make this a 5-year plan, make this a major event on the calendar. So I think we're well on our way to achieving that.
We are, and also I believe everyone here is in the coming months, and that's what we're hoping for. Thank you so much for your participation.
Thanks, Gloria. Thank you. All right, team. We are going to give you one last chance to do a little bit more networking, because that's what connecting is all about. That's what we want you to do here. It wasn't just, at the start I said to you, it wasn't just about listening. It was about getting involved in conversations and the opportunity to catch up with our experts on stage and also out in the exhibition hall. So come and join us. Lind Partners is very kindly sponsoring our final drinks and afternoon tea this afternoon. And we look forward to seeing you all again in 2025. Thank you.